Hedge funds are a scam. That's right, you heard me. Hedge funds are a scam, and today I'm going to tell you why. 9 years ago, Warren Buffett challenged the hedge fund industry. And somebody stepped up and said, all right, I'm going to take the aggregate of 5 hedge funds. We're going to pick 5 hedge funds, put them together, take their average performance, and we're going to put it up against Warren Buffett. You know what product Warren Buffett chose? Vanguard S&P 500 Total Market Fund. You want to guess who's winning that bet? 9 years later. 9 years later. I love the show Billions, and I'm sure you guys do. I mean, who the heck doesn't want to be Bobby Axelrod? The guy's a stud, right? Flies around in his jets, has his women, has his cars. He's aggressive, makes bank, tons of loot. I mean, my goodness, what's there not to like? But here's the thing. Most people realistically know they could probably never start a hedge fund. So they think, well, if I can't start a hedge fund or be a hedge fund manager, the next best thing is I'll invest in a hedge fund, right? So if I can't make what the manager makes, at least I can make a portion or a percentage of what the manager makes. So I get it. We all get it, right? And their marketing spiels, their marketing pitches, they're badass, they're awesome, right?
They say money can't buy happiness. Look at the fucking smile on my face. Ear to ear, baby.
They spend millions of dollars on marketing. But do they really perform? Well, before we even get into all that stuff, let's take a look at what some of these guys do, because I bet you, unless you're actually in the industry, you guys couldn't even name or even recognize the top 5 most successful hedge fund managers in the country. In fact, let's take a look.
Because it doesn't matter how much money you throw at this problem.
Persistence has a lot of value.
How far more can you push that? What does the next 5 years look like?
And if I can make them 10 or 20% more productive, that is a windfall gain for us.
So how'd you guys do? What'd you get? 1 out of 5? None out of 5? Some of you may have gotten 2 or 3 out of 5. Do you know those guys make a $1 billion a year? And you know how they do it? Fees. So what's there not to like about this lifestyle? I think I can get used to this lifestyle, and I'm pretty sure most of you could get used to this lifestyle. I know one thing's for sure. Most hedge fund managers out there, this is how they're traveling, okay? Now, certainly there's some smaller hedge funds out there, but the vast majority of hedge funds, they're using your money to ride like this, travel like this, use their yachts, their high-end cars, their Ferraris, their jets, etc., and so forth. And how are they doing it all? They're doing it with fees that they're getting from you and your account. So all these people out there think that hedge fund managers know something special. These guys went to Wharton School of Business or MIT and they know something special. But here's the fact. 92% of all hedge funds in the world underperformed the market over the last 10 years. 92% of all hedge funds in the world underperform the market. And guess what? If you're thinking, oh, I'm going to be like Stephen Cohen, I'm going to be like Ray Dalio, etc., and so forth, guess what? Those guys are very few and far between. You're talking 5 or 10 or maybe 15 hedge funds out of, guess how many are out there? 11,000. There are 11,000 hedge funds in the world, and maybe 10 or 15 make any kind of real, true, great returns. And guess what? Here's the kicker. You have to be stupid wealthy just to invest in them. And on top of being stupid wealthy, most of them are closed to outside money. They're not even looking for new money. They already manage 100, 150, 200 billion dollars. They're making tons of money off of you, off of fees. So as a trader, most of us don't like fees, right? Commissions, ECN routing fees, platform fees. Why? Because those types of fees eat into our profit. So you might make $100 as a trader, but after you take the trade, the platform fees, the commissions, blah, 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 you might make 87 bucks, 90 bucks. Well, that's what hedge funds are doing to you guys. They're feeing you to death. Hedge funds overall, generally speaking, 99.9% of the time are terrible investments, and 92% of them underperform the market over the last 10 years. Is that really what you want to do? Is that really what you want? You want to underperform the market and overpay to do so. It's like going into a Bentley dealership, paying $300,000 and walking out with a Honda Civic. That's not why you were there. So you go into these marketing meetings with hedge funds and they promise you the world. Oh, we beat our benchmark. But what they never beat or almost never beat is the market average. They all have these silly, ridiculous benchmarks because they need something to compare themselves to, and they get to change the benchmark and lower the benchmark. Why? So it looks good on their marketing material and their marketing paper, and you guys are buying into this, okay? And I'm here to tell you to stop.
Stop it. Get some help.
All right, so what I want you guys to do is take a look on the screen for a second, all right? What I did was I took the last 10, 11 years of the stock market. And you can see, guys, there's a 15.24% compounded return in the S&P 500 over the last 11 years. That's an unbelievable decade right there, okay? Over a 15% compounded return, all right? Now remember, 92% of hedge funds underperform the market over this period of time. So if you invested in a hedge fund and you gave up 2% of principal, which is pretty standard, and then on top of that, you gave up 20% of earnings, okay? All in all, over that 11-year period, if you started with $1 million, you would have paid those guys over $900,000 in fees. $900,000 in fees, okay, over an 11-year period. So $80,000, $90,000, $100,000 a year for the privilege of underperforming the market. In this scenario, that assumes that they actually met the market average. And we all know that most of them don't meet the market average, okay? So the other angle here is some people go, okay, well, I get it, Jared. You're starting to make inroads about, hedge funds. I'm probably not going to go that angle anyway. But what about a registered investment advisor, an RIA, or a wealth manager? One of those people. That's the hot topic nowadays. Wrong. Don't go there. Okay, unless you have lots and lots of money, 5, 10, 20, 30 million dollars or more, don't go there. Those guys charge between 1 and 1.5% to manage your money. Sure, they don't charge a performance fee most of the time, some of them do, but they're charging 1 to 1.5%. That is still $200,000-$300,000 in fees over the same 11-year period. And here's the other kicker. Most of those guys and girls, they underperform the market also, the vast majority of the time. So you're sitting here going, well, geez, Jared, I can't invest in hedge funds. Probably don't want to invest with a registered investment advisor or a wealth manager. So what are you telling me here? Just not to put my money in the market? No, that's not what I'm telling you. What I'm telling you is to take your financial control back. Take control of your life. Okay? And this isn't a pitch to be a trader. I'm talking about long-term investing here, 10, 20, 30 years. You know what you're going to do? You're going to take a total market mutual fund, a Vanguard product or a Bloomberg, any product you want. I prefer Vanguard. That's what I use. VTSAX, VTSMX, low cost. When I mean low cost, I mean 0.2%, 0.1%, sometimes 0.04%. So over the same 11-year period, where a hedge fund took over $900,000 out of your account, you would have only paid Vanguard $36,000. So you would have saved almost $900,000 in fees, but here's the best part. The fees are wonderful, don't get me wrong, but the best part is this. You know you're going to get the market average because it's a total market mutual fund. You're guaranteed to get the market average. That's what they do. That's what they're for. So if you look at the end of the day, the Vanguard fund made you almost $4.5 million. The hedge fund made you $2.8 million. That's a significant difference, and that just assumes the hedge fund even met the market average. So I think we've explained here today why hedge funds can be such a scam. They're not all scams, just the vast majority of them are scams.
If you don't think that's enough evidence, how about this? 9 years ago, Warren Buffett challenged the hedge fund industry. And somebody stepped up and said, all right, I'm going to take the aggregate of 5 hedge funds. So we're going to pick 5 hedge funds, put them together, take their average performance, and we're going to put it up against Warren Buffett. You know what product Warren Buffett chose? Vanguard S&P 500 Total Market Fund. It's a mutual fund just like the ones that I mentioned to you, VTSAX, VTSMX, etc. Very low cost and just tracks the total market performance. You want to guess who's winning that bet? 9 years later. 9 years later, the hedge funds are getting absolutely fugazied. Fugazied.
It's all a fugazi. You know what a fugazi is?
Well, fugazi. It's a fake.
Yeah, fugazi.
Warren Buffett's up 85.4%. The hedge funds are up 22.4%. In fact, of the 5 hedge funds, not one of them individually, not one of the 5 hedge funds individually is up more than 60%. And one of them's up 2.9%. One of the hedge funds, after an 11-year run, one of the greatest runs in stock market history, is up 2.9%. Yep, one of the greatest runs in stock market history, up 2.9%. Are you effing kidding me? Warren Buffett just put his money in there and let it ride. These guys are working and churning every single day, every week, every month. For what? To underperform the market. Okay? So those are professionals in one of the biggest bull runs in market history. And you know what they also preach, guys, these hedge fund guys? Well, we do better in more volatile markets. We do better in pullback years. No, you don't. And even when you do, here's a sobering statistic for you. In the last 40 years since 1980, 40 years, the stock market is up 82% of the time. There's only been 7 down years in the last 40 years. So even if a hedge fund did outperform on the down years, you only have 7 years to make up for 33 years of underperformance. Good luck with that.
So take control back of your life. Take 20% of your monthly income, put it into a Vanguard mutual fund or some other total market fund that's low fee based, and park it there. 10, 20, 30 years. When you're 10 years away from retirement, wake up and rebalance your portfolio. But until then, stop it, because all you're doing is you're giving this stuff to those hedge fund managers. Hey, I think it's Ray Dalio's got a 290-foot yacht. It's a $100 million yacht. How did he get it? Fees from you guys. Stephen Cohen, have you seen his house? It's 35,000 square feet. That was the addition he put on his house. Okay, how did he get it? Fees from you guys. As they always say, guys, if you can't spot the dumb person in the room, it's you. Stop investing in hedge funds and start taking control of your financial life. Invest in total market mutual funds that are low fees and get with the program. I'm Jared Wesley of Live Traders. I'll see you next time. Oh, hey guys. I'm Jared Wesley of Wesley Capital Management.
Cut.
What?
Nobody cares if you're Mozart, man.
Well, I'm just trying to show them how versatile I
You
am.
could juggle 3 violins and play the piano at the same time. Nobody cares. They just care about money, the color green.
All right. Cut. Oh, hey guys. Jared Wesley here of Wesley Capital Management.
Cut.
What is it this time?
Nobody cares what you're buying out of the Rob Report. We're dropping fees on these people like nuclear bombs, and you're talking about buying stuff out of the Rob Report.
You think it's a little over the top, a little obnoxious?
I think a little bit just for this, yeah.
Hey guys, Jared Wesley here of Wesley Capital Management.
Cut. Dude,
What?
nobody's going to believe we outperformed the market with that shitty-ass Rolex on. Where's the AP?
You don't think they don't think this will play?
Dude, who even wears that anymore?
Hey guys, I'm Jared Wesley of Wesley Capital Management, and if you don't invest with our hedge fund, then screw you. Hey guys, I'm Jared Wesley of Wesley Capital Management, and to be honest with you, I didn't always live like this. In fact, I used to live like this. But after years and years of underperformance in the stock market, my white privilege has finally caught up with me. And I'm here to implore you, to beg you to invest in my hedge fund, because honestly, private school is expensive, McLarens don't come cheap, and I think we all know I can't go back to flying commercial. Please invest in my hedge fund. Hey guys, Jared Wesley here of Wesley Capital Management, and although we didn't beat the market last year, we did beat our benchmark by over 2%. In fact, we made more money than God last year.
Cut. We make you more money than God.
All right, cut. Disclaimer. Although we burned through tons of fuel doing copious amounts of burnouts and generally had a lot of fun doing this video, we can promise you that no baby seals were harmed in the filming of this video. However, we can't say the same for most hedge fund managers' egos. In fact, I think they're running for safe spaces right now. That doesn't mean you should invest with hedge funds. To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.